We have to be finished here in about 40 minutes because I've got the closing remarks on the main stage. So Laurent has told me I cannot be late for that. And it's going to take me at least 3 minutes to get down there. So let's get started. So we're going to be talking about banking to finance as a platform. So, this is an extension of the last session we had. But I think, some different perspective from some different players here. In terms of brevity and accuracy, could we just go through and you guys introduce yourself and a little bit about your company for everyone that's here? You can kick off.
Sure. So I'm Mike. I'm the co-founder of Hydrogen. Hydrogen, we're like Stripe for building fintech apps. It's a modular API platform to build fintech products. Even though, as you can tell, we're based in the US, we deploy globally.
Is that because your accent?
Yes, possibly.
Possibly.
We have clients all over the world.
Okay. Chris?
Yeah, I'm Chris, co-founder of Elinvar. Elinvar is a platform for asset and wealth manager, allowing them to completely digitalize their business. You can think of ourselves as, if you use SAP for HR, you can use us for all your asset and wealth management processes across your whole value chain.
Tim?
Hi, my name is Tim. I'm CEO and founder of Deposit Solutions. I started the company 8 years ago to build open banking for deposits. So as a bank, you can implement our platform and offer the deposit offers of other banks to your own customers under the existing client relationship. We are about 200 people now, mainly based in Hamburg, serving more than 50 banks in 16 countries. And we want to make open banking industry standard for deposits.
Cool. We're up to Alexandre.
All right, hello everyone. I represent Moonshot-Internet, the insurtech dedicated to e-commerce through API, parametric pricing, and real-time claims handling. And we are backed by Société Générale Insurance.
Jen?
And last but not least, my name is Jens, CEO and founder of Spotcap. Spotcap is operating in the SME lending sector. We have started as a direct lender to SMEs, operating in 5 countries, and have recently launched our lending as a service value proposition in a partnership with a bank called BAWAG, which we are kind of rolling out in the DACH or German-speaking markets as we speak.
So when you guys look around the world at what's happening in the banking space, there's so much happening in so many different places. Who do you guys look to? Who do you think is leading the pack in respect to where the future state of banking is going to go?
If I start, I think what we are currently looking at, we are looking far too much on the finance processes and not enough on the tech processes. So in order to really improve our business, we should more look on what is leading technology. So for example, our platform, the role model for our platform is rather Netflix and not a classical bank. And that actually allows us to do much more interesting stuff and our partners to do all the data analytics, all the fancy stuff everybody's talking about. But the first thing really is to ensure you have modern technology. And today it's far too much, from my perspective, about front ends only and nice things there, but not about real core technology. And that is what is really driving the business, and the ones who are focusing on that first, from my perspective, are going to be the winners.
Okay.
Yeah, I think
it's a diplomatic answer.
I think I would tend to agree with that. I think it's at the moment in some product categories hard to lead the pack because the infrastructure is missing. It's if you have, in my view, there's increasing specialization of point of sale owners who focus on owning the relationship and are forced to open up for third-party products to service their customers competitively. And on the other hand, there is a specialization of other banks on being really competitive in certain product categories. And then to open up and connect to each other, you need a middleware, right? And in some product categories that exists, in others, this is just being built. I mean, it's what we do for deposits. There are other product categories. So I think the nuts and bolts of open banking are still in the making.
Yeah, we used to think that you needed a branch to do deposits.
We do?
No, I said bankers used to
yeah,
think.
okay, well.
In fact, it wasn't that long ago that when you talk about digital versus branch, that many banks would say, well, you need branches because that's where customers make deposits.
That's true. Still, you need to, like, if you want to use a simple savings product, just a fixed term deposit account, you need to open typically an account with that respective bank, even if it's nothing else you want of that bank, and even if that bank has nothing else to offer you. So it's really backwards in terms of the design of the underlying value chain.
And yet the largest deposit holder in the world is Ant Financial, and they don't have any branches, right? The mobile money market fund, Uebao. So
Yeah, but Ant and some of the Spanish banks have been very forward-looking, and to your point, building infrastructure. So the reason why they're able to do it in China is they have no legacy infrastructure to try to fix.
That's a very good point, yeah.
As BNP and other banks here, Barclays in the UK, has to do. So we view this as a infrastructure problem number one. You can't build really innovative products like their
and a legacy behavior.
when they blink, now they pay for things in China. You can't do that if you have no infrastructure, and we can't help someone to build really cool products unless you have that. So we actually deploy a whole architecture for them. Basic things like authentication, document storage, client analytics, client data storage. Things people in the US and Canada maybe take for granted. Many countries throughout the world, they just don't have that. So I would say the Spanish and Chinese firms have been the most forward-looking, opening up their API stack and building infrastructure.
Just to add something, we are living a very interesting and fascinating period because you can have the marketing view to satisfy customers plus the technology, and we are talking about, for instance, such as API. It means that banks are becoming more and more platforms, and in fact, the point of contacts, whether it is a retail, an online, an app, it means are you able to serve at the right time with customer-made products your customers? And in our vision, I'm more in the insurance part than in the banking sector with Moonshot-Internet, but we have the same state of mind when we try to address these problems through API. We say there is a need, and with this need, we need to push the right product for a slice of what they used to buy in order to be relevant. And it means that the banking industry will be much more fragmented than we have the habit to live in.
So I'll try this a different way in terms of getting at where you guys are bringing improvement to the space. I've heard other commentators in the space when trying to classify what fintechs do as sort of every fintech is trying to take friction out of the experience. Would you broadly agree with that? No?
So actually what for example, for our business, I would rather say we are the central tech for our partners. So you don't need a tech department anymore. So if you're working with us as a partner, traditional private banks and discretionary portfolio managers are really focusing on asset management strategies, on building up trusted brands, and on holding relationships, but they are not tech experts. I mean, I was responsible for a larger private bank for the whole market side myself, and we had like 5 or 6 tech guys. Everything else was outsourced anyway. But back then it was outsourced to multiple partners, and it was a very old kind of technology we were using. So what we are just trying to build is a really modern tech partner, but we are managing everything for our partners, including the connection to other fintechs. So for example, when it goes to KYC providers, ID providers, market data providers, research providers, custodian banks, we are connecting all of these, but we are the central tech partner for our partners. So I'd say this is more than a fraction.
It's more than friction, yeah.
I mean, in our scenario, it's definitely to a large extent friction because as a lender, right, we have quite a specialized service. So what we realized is that banks still want to keep this core, the core banking platform themselves. However, the problem obviously is that this platform, as we already outlined, cannot really talk to services like ours. So they are about to build this abstraction layer to be able to talk to someone like us. And then in this space, we obviously offer end-to-end services, back-end, front-end application and service and so on. However, things like loan services, transaction services, etc., are still something they want to keep. We have it ourselves. We can offer it, but they still want to have it connected. It's to a large extent also due to regulatory requirements, and I also believe that their legacy core systems, they're still going to exist probably in 10, 20 years, but they built something on top which is able to talk to this because it was forced by regulation, and it has to be stable, and they don't care whether it's old school or not as long as it works, at least to a certain extent. But maybe I'm wrong there, but at least for the upcoming years.